So today's webinar brought to you by QuickBooks. I'm from Carbon. Definitely check out QuickBooks Online. And then again, if you're interested, you can check out Carbon as well. Today's webinar, what are we going to be talking about today? So because it's the new year, welcome to 2017, though we are in the fourth week of it. We're going to talk about today's trends, but also tomorrow's shifts. And what I've done is I've broken this webinar down into three parts. One, looking at what are the barriers and what historically over the last year or so many of you might be facing. Then looking at what the current trends are of 2016, 2017, and then we're going to take a forward look out 1 year, 5 years, and even beyond that in terms of what's coming, so you can understand where the puck is moving to and then be there where it is. If you are on your QuickBooks training journey, this is what it looks like. There's Firm in the Future, which I got done with. I was on the road for all of the fall. Fundamentals training for those of you brand new to QuickBooks Online, certification for those of you that are familiar with QuickBooks Online and looking to get certified, and then advanced certification for those of you already certified and looking to be experts on the advanced techniques and so forth of QuickBooks Online. You can go to QuickBooksTrainingEvents.com to be able to sign up to any of those. There's a lot of online classes available, especially as we get into the season. Before we get started, just a little bit of housekeeping overall. If you're new to GoToWebinar, you can expand and control the panel with that little orange button. I will try to answer questions as we go through the webinar, so feel free to post them there. I am a little bit, it's hard for me to multitask, but I will do my best. And then again, you might want to close any applications like Skype and the like that might slow your connection down. Who am I? My name is Ian Vason. I'm the co-founder and vice president of product marketing at Carbon. My email is up there, by the way, if you want to email me afterwards, you've got any questions regarding the content or things in general. I've been in the industry for 15 plus years and technology for 25 plus. I did work at Intuit for almost 10 years, and I did lead the QuickBooks Pro Advisor program and have worked across all the different flavors of QuickBooks. So I do come from a similar background and knowledgeable, so feel free, if you have any questions, feel free to email me or check out Carbon. If you're looking for more content information, not only what we do here for Intuit, but you can go to carbonhq.com/editions and learn more. We're not going to be talking about Carbon, but it is the practice growth engine for your accountants. You can find more at the carbonhq.com address. I'm just going to go through a little bit of the screenshots. There you go. Let's move on to the content. For those of you that are looking for CPE credit today, there is one CPE credit up for grabs. So we're going to be doing polling questions today, not challenge questions. So I'm going to launch the first one. We are, we just changed my background. Which firm or the future topic are you most interested in learning about? Is it practice growth, process improvement, firm management, technology, strategy, and vision? The team wants to know kind of which category you want to go on because they're bolstering and putting more content up each and every day. So go ahead and put that up there. The faster you enter those in, the quicker we can move on. Again, there is one CPE credit up for grabs. We will be doing 4 polling questions throughout today's webinar. So I'm going to give it a couple more seconds. Again, practice growth, process improvement, firm management, technology, strategy, and vision setting. Okay, we're going to close the poll down. 3, 2, 1. Just to go up in here and share some results for you guys. Practice growth, practice growth takes the lead. Technology number 2, process improvement and strategy and so forth. So let's go ahead and hide that. Let's get my screen back here. So we should be able to see that. There we go. So let's get to the content today. Today's trends and tomorrow's shifts overall. So, like I said before, we're going to go through 3 sections, the top 10 barriers to firms. So those of you that, again, for the learning objectives for today, we're going to look at what those top 10 are. I'll talk about them briefly. We're then going to move into the 5 industry trends impacting firms. And specifically, we're going to be talking about, we did a lot of research in conjunction with Intuit regarding what are the 5 main trends. We actually have a trends report that you can download later. I'll give you the high level of what that is. But what are the 5 major things that are happening today, now, that you need to be aware of and that you need to be across with your firm? And then I want to go into the 3 major shifts that are on the horizon. Again, this is not only looking at short term or medium term, but also looking long term and what are these major shocks that are underway and coming. So let's go to the first one. Section 1, top 10 barriers to firms. So when we actually collected this, we collected this from several thousand accounting professionals. I actually met with them when doing roundtables over the last several years, where we would meet with them in groups of 20 or so. And then we actually did some polling on top of that. And the barriers broke down into 7 major category types that are listed here. The top 2 were practice management and human resource management, with time and strategy and so forth being there. And while the buckets of this actually provides a little bit of color and detail, it's really the top 10 that really provide the most detail. And for those of you out there, and again, I'll put a polling question up here in a second, but number one thing that we see across the country and actually across the globe is really around talent acquisition. And the issue there is it's not only acquiring talent, but it's also retaining talent. There's been a shift that's been occurring in terms of the expectations and the situation of entrepreneurship, the classic sort of roles that people might do to get into industry. You might go to a 4-year university, go work at one of the big 4, big 5, whatever your time frame was, and then be able to migrate into smaller practices and the like. And a lot of folks might do accounting and bookkeeping and they're part-time and then move into a full-time route. Well, that's relatively changed. It's been a very dynamic and a hard market. There's companies like Google and so forth that create the expectations, while false, for a lot of the millennials in terms of what to expect when going to firms and the type of compensation they should have and the culture that they're looking for. And so because of in addition, the changing of the times where we came out of the Great Recession, and now we're in the situation where a lot of businesses have learned that their finances are crucially important and they're looking to outsource much of that capability. There's just been business to go around such that to fill the gaps and folks' firms as they're growing has been harder and harder. So talent acquisition has been number one. For those of you out there that have got great talent in your organization, in your practice, you should hold on to that dearly. Write a thank you card, show them that you love them. Make sure that you keep them, because again, it is so hard to find people these days, and it may take you 3 to 6 months to fill any gap. The second one that comes up time and time again was work-life time management. The iPhone, when it came out, basically revolutionized how we work and expectations around that. Clients expect to get a hold of you 24 hours a day. You've got to manage those expectations, and if you don't, you're going to find yourself getting phone calls, texts, and emails all sorts of times of the day. And so, we talk to a lot of folks, and really being able to manage their personal life and their work life has been quite hard. There are different things to do, but again, it pops up as number 2, because again, if you don't do that, you're ultimately just going to be working nonstop. Now, technology can help you. We'll talk about that in a little bit in terms of allowing you to work remotely and so forth. But again, you got to know how to manage it overall. The third one was really around marketing. And on the marketing one that came up, it was really around how to do things like referral marketing, how to ultimately create the right presence in market, search engine optimization, and so forth. There's a lot of really, really good marketing content. I've participated in some of it that are on the firmofthefuture.com site, where you can go ahead and understand how to do SEO, how to do referral marketing, how to do inbound, outbound, those types of things. The fourth one that came up was practice management. And ultimately that was understanding how to get visibility across the work that's being done, transparency on who's doing what, collaboration around that. We're going to talk about collaboration a little bit later too, because that is one of the emerging areas. And ultimately being able to see everything from a prospect ultimately to an existing client and all the work that surrounds that. Part of that same sort of category, but on the similar thought, is around standardized processes. Again, when we were at the road shows this year and I'd ask folks who had standardized processes, generally we'd only get 10 to 15% of people raising their hands. It's critical for practice efficiency to exist and to be able to make the most of what you have. You've got to standardize your processes overall. The sixth one was value pricing and bundling. Again, there's a lot of great resources from Ron Baker, things up on firmofthefuture.com to help you down that process. It is not something that happens overnight. It takes time to do it. And then again, you see on the bottom ones here, we got onboarding, growth of the business, technology. We saw technology pop up as one of the big categories of interest, and then being able to expand with new clients. So, typically when we ask folks, we'll say, what are your top three? And most likely, the top 1, 2, or 3 is going to be one of your top 3. And then the rest should probably sit here as well. This is part of a list of 50 or so. If you're interested in more details around these, there actually is a overcoming barriers on firmofthefuture.com. I can also point you to something as well. And with that being said, if you want more regarding the barriers and so forth, you can go check out some articles. I put up this. You can download, by the way, this entire presentation off of the GoToWebinar. So you can actually go watch this particular topic in more detail, both in a webinar fashion or in articles from firmofthefuture.com or from Carbon as well. So if you want to learn more, go there. I want to keep us moving because I want to get to the top industry trends now and moving forward. So we're going to do our next actual poll here. What is the top barrier to your firm? Go ahead and launch this again. Not sure why my keynote keeps doing that, but that's okay. Is it talent acquisition, work-life time management, marketing, practice management, or if you're daring, go into the other? It only allows me to give 5 on the GoToWebinar, so I put those 4 up there plus the other. Again, faster you answer, the faster I can move on. So let's get those votes in. Is your top barrier talent, work-life time management, marketing, practice management, or other? Okay, we're going to close this out here in 5, 4, 3, 2, 1. And top bidding was work-life time management with 56% of the vote. So that is where you guys are at today. So let's go back to the presentation. So now section 2, the 5 industry trends impacting firms overall. So this all comes from the Carbon Accounting Trends Report. We collected all this information from roughly about 3,000 firms. It's a collection of what we had done at the roundtables, what we had done in the Firm of the Future roadshows, as well as some polls. It turns out, you in the audience and those other 3,000 members you were part of a larger ecosystem of 500,000 firms, roughly 2 million accounting professionals here in North America, and ultimately facing these particular 5 trends. And I'm going to jump into each one, and they're going to also relate to what we're looking at long term and some of the shifts that we're going to be seeing there as well. So number 1 trend that we see going on currently is that number crunching takes a back seat. And what I mean by that is technology that we talked about briefly beforehand is changing quite rapidly. And ultimately, where machines do well is on repetitive tasks, things that require manual data entry and interconnectedness of systems and the like. And there's 7 different major services that you might be offering. An 8th if you're doing individual wealth management, but the 7 are audit, accounting, tax, advisory services, IT consulting, bookkeeping, and payroll. And amongst those 7, the 2 that are hit the most in terms of, again, this bit of automation that's occurring would be compliance and bookkeeping. And compliance, it's a situation, and obviously we don't know what's going to happen with the new administration. There's been a lot of talk on simplification, changing of particular loopholes and so forth that might occur, but nobody really knows. But in reality, when you're talking about compliance, while it does get a little bit more difficult every year, it is something that's well understood, it's defined and so forth, and therefore continues to be automated by different various products. And again, you have that with the CERT Pro Series, Intuit Tax Online, and the like. And ultimately what that does is it allows for capacity to be increased. So whether or not it be on the bookkeeping side or on the compliance side, by being able to do a lot of that manual work, repetitive work, it ultimately frees up time. And so that's where a shift has occurred with that around value pricing. Because again, if you're going ahead and charging the same amount that you were before, and you're able to do things faster, you're ultimately going to be making less. And so that shift to value pricing is in response to the fact of this continual push on automation overall. In addition with that, the relationship with clients has changed. This has come across a lot from the Great Recession and from technology that exists in people's pockets. But A lot of folks learned that when they went through the Great Recession, that again, if they didn't have their finances in order, a lot of folks lost everything. And ultimately, that required folks, when coming out of it, to know that the best people to be working with are their trusted advisors. And one of those, and one of the most critical ones, is all of you there in the audience today, accountants, accounting professionals, because ultimately, you can help them understand what their books are. They can focus on making their widgets or their services, whatever it might be, quicker, faster, cheaper, and better. And so they have had more demands. That's what's impacted a little bit on that talent side that we saw on the barriers, because they're looking for more and more. And they're looking for not just bookkeeping, not just payroll, not just accounting services, but advisory services, advice, planning, things of that nature. And so because those communication touch points have changed overall, it's about moving it to another level. I put up a quote here. I've got a few interspersed throughout the presentation today. But because of the compression that's occurring on those two sides, on compliance and on bookkeeping, it's about leveraging that to be able to drive to more advisory services overall. And there's been a lot of talk about it, so I don't want to necessarily belabor the point. But again, with that freed up capacity, you've got to be able to move to those higher profit, higher value services, not only for yourself, but for what your clients are wanting as well. And so the action items out of this particular topic, out of this particular trend, is that you've got to change the conversation. The conversation is not just about when someone walks in the door and they say, look, I just need to be able to get my taxes done. It's about being able to have that value conversation and understanding, well, what lies beneath that? What can we do beyond just being able to get that filing done? What can we do to ultimately help you get to whatever your desired goal is, Mr. Business Owner? Part of that's going to be then moving into business advisory services. Technology, again, in this case, it's ultimately driving that change, but it's also allowing you to free up that capacity. So it's about embracing it and then leveraging its strengths. And now I put up here the creating a social media strategy. The reason for that is you can understand a lot about your clients and what they're facing by looking at what they've said online and their social media presence. It's less about here on the marketing side. It's more about understanding what's happening with them so that when you have those conversations, you can get a glimpse into what's going on so you can be empathetic. You might be able to get a sense of what they're struggling with and be able to bridge that conversation when it happens. So that is trend number one. Trend number two. I feel like this is a bit of a buzzword these days, but it has reasons, it has applicability. It's really around what's your specialty. And the reason for talking about your specialty is if a small business was going to go out and they're going to get, let's say, again, we're talking about this time of season, so around tax, but let's say I wanted to get my 1120 done. And I went from firm to firm and I asked, hey, I need to get 1120 done, what's it going to cost? Ultimately, the small business owner is going to be racing to the bottom to be able to find who's going to offer it the cheapest. But it's those folks that can actually be able to have that value conversation and be able to differentiate themselves, explain why, look, yes, you might need that done, but the reality is, you're this type of business. And we know how to be able to drive more value for you, not only in terms of getting more money back or lowering your liabilities, but also we can look at your business and change and help assist you in getting to where you want to go. And by specialization, it allows you to be able to charge more for the expertise, the advice, and what you do. And so again, that is one side of the equation on specialty, which is being paid for what you know and how you be able to talk about that with them. But the second one, and the more important part of this, is in terms of that marketing barrier that we talked about before, which is having a targeted strategy. If you want to waste a lot of money, then you want to have a broad marketing strategy going after all small businesses in general. Because the reality is you're going to have very few that are actually going to pick you up on your marketing and then take the next step to actually entertain a conversation. And that's because folks want to be able to work with somebody that understands their business inside and out and provides them the advice they need to get them to that next step. And when there's a generic sales message, marketing message, it ultimately doesn't have as much, it's not going to resonate as strongly, and your ROI and your marketing is going to drop precipitously. So there's a bunch of different talks. Again, I have it on the end here for some links about how to actually go about determining your particular niche, how to be able to take the next step on sort of niche marketing. But the key here is if you want to lower your costs on the marketing side, you want to increase your fees on your services side, then it's really about having a focus on who best you serve and how to serve them. When we talk to folks around, again, the narrower you go, the better. We had one person who really only worked with folks that worked with, it was farmers, but the farming was specific to horses and so forth in terms of raising and managing horses. That is a very well-defined niche, and the question is whether or not that's large enough for them, but it was. In this particular example, they've defined the medical industry with a revenue target that they typically work within. And so we're in the new year. We're in the heavy season or the busy season per se, but this is one of the areas where you want to make sure that you stay focused to make sure you've got the right clients, not just a whole mixed bag of clients in your book of business. Action items in here, things to do. Your starting point for really on creating a niche or understanding your niche is to look at who you currently serve today, who you're passionate about, which ones provide you the best revenue streams, the best profit, and then be able to understand who you love and why you love them, because that usually is your starting point of maybe where you want to gravitate towards. Another way to look at this is that particular group, again, are they going to provide, is there enough value there? Is there enough bodies there? Maybe you're geographically constrained, and if so, maybe that niche isn't going to work. Or maybe, again, you're working virtual, and again, you have the ability to be able to be as really focused, but be able to transcend different geographies. And then ultimately, you need to drive that particular focus down into your marketing strategy overall. So that is trend number 2. Trend number 3, integrative, intuitive technology. And again, when we talk to people on the road, I hear the word that I'm apped out. There's just too many apps out there. It's just too confusing. And the reality is that the honeymoon period for apps is over. Now it's a situation of being able to use best in breed and using applications that ultimately do more than just one thing. So when we surveyed folks around, we would see a span of anywhere from 5 applications to ultimately run their practices and serve their clients to upwards of 40. 40 applications is way too many. There's different user interfaces, there's different workflows, data scattered everywhere. You should not be using that many. What we're seeing now is that the applications have evolved, developed, and now they're able to do more than just one thing that they were hyper-focused on. So similar to what we just talked about in terms of specialty and niche, many of these applications focus on something very granular, very singular, to be able to ultimately do it really well. And now they've finally come to a point of branching out. So examples might be, you've got like T-Sheets. A lot of folks love T-Sheets. T-Sheets used to just do time tracking. Well, now they're doing scheduling. If you look at something like Expensify, Expensify used to be just doing expense management, and now they're doing a lot of stuff, and they're branching out to some of the travel-related components. Bill.com started off doing AP management, and now does AP and AR. And so you're seeing that these applications have matured, and you want to be able to find applications that solve the key problem and pain that you have, and then ultimately drive additional problems that are out of your firm. And so it's looking at the ones that solve that and then evaluating those to see whether or not you can kill 2 birds with 1 stone, for lack of better words. On this, by the way, I've got 3 articles coming out on how to narrow down the choices, how to pick the right technology, and how to stay across the changing technology landscape. That's coming out on the Firm of the Future site. The first article, I think, was posted last week. And so if you go to firmofthefuture.com and look for my name on there, you'll see those articles coming out. There is a place that you can go if you go to Accountex. They have a map that shows you the 500 applications that you can choose from. And what I would suggest that you do is you take a look at that and you look at the problem spaces that you want to solve, and then go look at intuitsapps.com, because any application that you want to use better be tied to your general ledger of choice, and that's QuickBooks, because if not, you're going to be having to deal with data in 2 different places, and it will be a nightmare and a headache. So Those are two places I would go. And I think this is a really, really, really great quote and hits it home, which is, it's not about more apps, it's about doing more with less. And so you should be taking a look at what you're using today and figuring out, well, how can I consolidate this picture? What makes sense for what I have, and what can I get rid of? And even if you choose an application that's working for you great today, you should be, evaluating that over time to figure out whether or not there's a better option out there. Because again, you want to be able to move the ones that are mature, solve your problems the best they can, and possibly consolidate the different processes that you want to have. Some action items here. Before you go and pick up new technology, your technology better be solving a key pain point. And your processes are the most important thing, not the technology. So if you're going to go to you're going to go to improving your efficiency, you really need to understand what are your core processes and make sure that you improve those processes first and then find the technology that marries best to that. Look for apps that incorporate one or more of those processes, and do not take in apps that are siloed with their data, because you're going to have to be doing all that management between them. Okay, the fourth trend, age, and age does matter. I'm going to put some stats up here. The average age today of practitioners is roughly 50 and 50 and above. And of those folks, 50% of them have not adopted the cloud. Interesting, okay? But if we take a look at that a little bit differently, the average age of those who have adopted the cloud is 36, while the average age of not adopting the cloud is of 40. Now, this is a major statistical difference between these two. So that is a large number gap between the two, and it basically shows you that there's a huge separation between the younger generation and the older generation. And we're using the cloud adoptive measure here to show that. And when you're talking about what that means, it means that firms, are generally, again, are top heavy with folks that are resisting the change. And again, when we talk about talent and millennials and those coming in, they're looking for firms that have modernized, that have not just cloud technology, but of working in modern fashion. And so ultimately, again, when you're looking at it from a talent perspective, it becomes harder and harder to hire and to retain people if the firm isn't evolving as much as technology in the general sense is evolving. Again, millennials, again, that's defined as folks, in their 20s and early 30s. They grew up using social media. They grew up in a world of only email. They grew up with text message being the primary mode of communication back and forth, not a phone call. And they're looking for places that are able to, work the way they do. They expect that they can ultimately see everything in the palm of their hand. The businesses that you're working with, the clients, they expect a similar sort of thing. Again, when you look at that sort of age demographic. And so to hire them and to retain them requires a different way and a different culture overall. We see this time and time again. Older partners are holding off on change, and it creates a lot of friction. Literally, I was talking to a firm a couple weeks back, and one partner wanted to make the change and change the technology that was driving underneath and the way that the company was being run, and the other partner did not. And what happens is when you have a situation where there's a lot of tension like that, nothing changes. And ultimately what happens, and what has been happening, is they're losing staff and they're losing clients. And so you have to look at the situation at full face value and where you want to be. We see firms that have modernized, who haven't modernized their firms and looking to sell their book of business, they will get anywhere between 0.6 and 1.1 times next year's revenue. For those who have modernized their firm, and that can be a combination of their processes, their technology, their client base, they get anywhere between 1.5 and 3 times next year's revenue. So in terms of the marketability of your practice, if it's your nest egg, if you are one of those folks that's looking to go in retirement, what is your succession plan? You need to think about that. But ultimately, should you make the change, and the change doesn't happen overnight, it takes time. And so one of the things that's interesting this quote brings up is time and time again, we talk to firms and you're doing everything that's right for your clients. You're killing yourself to make sure that they're taken care of. You're helping them with planning, but you're not taking a step back on your own firm. And again, it's the beginning of the year, New Year's resolutions. You need to look at where your firm is headed and where you want it to be. A succession plan will take 3 to 5 years to put in place. Business planning needs to happen, at least have a 1-year lookout, because you want to take that business plan and drive it into what you're going to be doing each quarter, so that you as you're an individual, but also your staff, can drive to the singular goal that you want to drive and make sure you're accomplishing it. And so you help your clients do that, but you got to do it for yourself. And so the action items here are, thinking about, in terms of, long term, where do you want to be? Do you want to hand this off to, in the family? Do you want to sell the book of business off? Are you looking to, merge or acquire? Are you looking to grow aggressively and grow from, a boutique firm to a medium-sized firm? I don't know, but you need to have those conversations. You need to think of what that succession plan will be. You may have to have difficult conversations with the other partners in terms of maybe you have to transition the firm, maybe even transition partners. I don't know. But it doesn't happen overnight. It can take 3 to 5 years. So it's something you need to be across and working on sooner rather than later. The last trend, going global. We, again, with the phone, with everything else, business has no borders. The first time I gave part of this talk and previously, Brexit had happened, and the entire world markets went sideways on that announcement. We've just seen, again, the entire U.S. election cycle. And again, you saw world markets just change based upon the news of the day. And so we live in a global economy. It's interwoven together. Not only, the borders have dropped. There's a lot of, the dollar is so strong these days. There's a lot of businesses that are looking to sell their products and their services here in the States. And so it's all interconnected. In addition, because of things like the iPhone and other things, I'm holding my phone here, work and our life boundaries have blurred, which is why we talked about the barriers beforehand on work-life time management. And so again, a lot of it has come together, and a lot of that impacts company culture and the workplace. So we're seeing a lot of firms working completely remote, absolutely no infrastructure whatsoever except for the technology that weaves those people together. And this is not just single person firms. I'm talking firms in 30, 40, 50 people in size. The culture makes a big difference. We see firms that are working with partners internationally that have had to change their firm to be completely paperless, to not have cubicle walls, but to have open workspaces so they can reflect the type of clients that they like to work with. Because clients also want to see firms that reflect their own sensibilities and their own company cultures. And so, again, you have to think about the fact of how your company culture is going to play in not only hiring, not only retaining talent, but also how to work with clients and so forth. No longer do you need to have an office space. Again, what we're seeing is a lot of folks partnering with different firms internationally. Again, the two biggest assets that we have here in the States is we have one of the most complicated tax codes on the planet, which people don't understand. And we have a lot of compliance issues with payroll and ultimately GAAP accounting rules and the like. And so for firms outside the States that are working with clients doing international trade, they've got to work with one of you here. And so we see a lot of firms that have partnered with other accounting firms internationally. They use the Pro Advisor program, find a Pro Advisor network, and they're able to expand their practice. And so, again, I put this quote here. It's great in terms of there's no reason to be contained in little boxes. So think about, what those boundaries are and how you can break them down and how they're important to your growth overall. And so my action items for this section are take notice on what's going on around you. Social channels help you keep abreast of things like that. Webinars like this, people are using LinkedIn and posting their thoughts up there, but make sure you notice what's changing both here and now, but also in the future. It really is going to be one of the big changes is going to be really around culture and firm culture, and that's really on retention of talent and attraction thereof. And so it's something you've got to embrace. And then where it makes sense, network internationally, a network beyond the boundaries of your own city or state. A lot of firms are expanding virtually to be able to pull in additional resources, whether bookkeeping or accounting resources from other states. One for cost, two for the talent that they're able to get, and leveraging their tools of choice like QuickBooks Online to do that. So again, I wanted to talk today, this bit about what are the trends currently in motion. The number crunching, we talked about that. Understanding the situation there around what's happening with the compliance side and the bookkeeping side. Your specialty, being focused to drop your cost, increase your revenue and profitability per client. How technology is playing a factor in that. How to consolidate. The age gap that exists, be cognizant of it because it has implications in terms of your planning, but also on your expansion, and then going global and the impacts around it. If you want to learn more, you can get the trends report or the generations report. There's the URLs to pull them from. Again, if you download the PDF, it's clickable and you can get to it. So you can check those out. It has all of this in much more detail. And I want to get to our next polling question here. So, what trend category is your priority for 2017? Is it number crunching, specialty, technology, age, or go global? Again, this is the third of the 4 CP questions we've got today. What trend category is your priority for 2017? Is it number crunching, specialty, IT, age, or going global? Give a few more seconds before I close the poll. 3, 2, 1. Closing the poll. Share the results real quick. We've got specialty by and far ahead, IT second, and then tie there for the last. Go ahead and hide the results. Let's get back to the presentation. Okay, so now we're in the last section here. 3 major shifts on the horizon. So I broke this down into 3 sections, spanning from what's currently that you're going to be facing not only right here, right now, but going into that sort of medium term. And that's what we're going to talk about in terms of collaboration. And I'll expand on that in a second. The next one that goes from, again, all the way from medium to long term is really around automation. And we're going to talk about that. There was actually some, for those of you that attended QuickBooks Connect, and I'll highlight some of those, that automation is already coming to you literally as of last October, but also coming out inside of QuickBooks Online and the other Intuit products as this year unfolds. And then the last one, which is another topic that's been coming up recently more and more, not a lot of familiarity with, so I'm going to talk about it at a high level, but then show why it's a big shock to the system. And then this is much long-term, much further out there, is blockchain. And what the definition of that is and what it really means and how it's going to be a disruptive component to what we do and how we do it in terms of financial management. So we're going to talk about collaboration first. And I put this quote up here from Tom Hood. You might be familiar from him. He's from the Maryland CPA Society, also head of the Business Learning Institute. And he says, the collaboration curve is quickly replacing the experience curve. Who you know is replacing what you know. And what he means by this is they're finding more and more that when folks are coming out of college or you've got certain training, your knowledge of what that is expires relatively quickly. It's got maybe a shelf life of 3 years or so. And so because of the dynamic component that we live in and how we need to serve our clients, it's less about what you know, but more about how you can interface with others and crowdsource the answers to the problems that you have. Tax is a good example. You may not know the intricacies across all the tax code, but do you know somebody that does have the answers, and can you bridge out and reach and get that information to be able to serve your clients? So it's your interconnectedness with others and be able to do that in multiple different layers to be able to satisfy those changing needs, because we are in a very dynamically changing environment these days. And so I wanted to talk about this 3 different levels. There's an external component to it, there's a staff component, and there's a client component to collaboration. And on the external side, we're seeing firms more and more these days outsourcing different things that they don't do. So We see, for instance, classical CPA firms, full service firms that no longer are going to be doing the tax work. They're actually going to partner with smaller single person CPAs to be able to handle the books for, or the taxes for their individual tax, or for the clients that they have in an individual level. And they're stepping out of that whole service stack itself. And they're focusing on the advisory components more so. We see folks that are, again, it might be specialty tax, or maybe it's payroll. Again, working with others and then requiring that sort of external collaboration back and forth. On the staff side, we're going to look at one tool in particular on how to be able to collaborate on the work that's going on in real time to be able to make sure it's done. So how do we get out of our inboxes and ultimately work collaboratively to complete something, even though somebody might own a given project, but then how do you ultimately get the answers from the collective staff in order to solve? And then the last one is really, how do we work with clients in terms of how do we be able to get what we need from them? Onboarding is a good example, without having to go through all the phone calls. How do we bridge that to make it more collaborative so that, again, we're all part of one collective team, even though it's two different organizations? So I put this up here. Here's a diagram of what a full service accountancy technology stack would look like. And the classic definition only had the two sections on the far left and the far right. Client services. You have products like QuickBooks Online, Intuit Tax Online, QuickBooks Online Payroll, or Intuit Online Payroll. Those are products you would use to service your clients on the left, and they would handle all those different services levels. On the right is your classic practice management. Your CRM, your billing might be through QuickBooks. You might be using spreadsheets and whatnot to track projects and so forth, or smart sheets and so forth, and time tracking with T-sheets, whatever it might be. But that middle section, the client management communication, that is the area of innovation that's occurring today that you're going to see also a lot of impact and change over the next 3 years. It started off with the client dashboard, and that is QuickBooks Online Accountant, and now it's branching to collaboration with your client. I'm actually going to show you some things there to get you understanding how that's going to look in the future, but then also collaborating and communicating back and forth between folks to ultimately get work done. One product that people have talked a lot about, and again, talking about team collaboration, are products like Slack. It's spelled S-L-A-C-K, Slack. This is a view of what Slack looks like. I had built one for the firm of the future that we were using on the road shows. And what this is a way to collaborate from an internal team perspective. Predecessor products to this might be like Yammer and so forth. A bit of Carbon does this as well. But again, I'm showing Slack here. And what it is it uses channels. It uses threads of conversation with context to allow for an ongoing conversation to occur. If you have more than 3 staff, I would highly encourage you to take a look at something like this, because what it does is it allows you in real time to be able to have those water cooler conversations and the necessary back and forth outside of email so that you can reduce your email by 60% and ultimately be able to give yourself a ton of time back actually servicing the client and not having to hunt and peck for things. So again, on the team collaboration side, there's a lot of innovations happening on that. One of those players, again, is Slack. Client collaboration, I wanted to give you a sense of this. So again, client collaboration, what you're going to be seeing coming out in the near future, and again, I'm using Carbon as an example of this, but again, there's other things that you'll see coming out as well as time unfolds, is the ability to take your workflow, put it in checklists, and then be able to spawn those out and collaborate on in real time with your client. So in this example, it shows a checklist that exists with different tasks labeled there in black for the client. And so again, these things can then be set up to be able to send to a client, be auto-nag. You can auto-nag the particular client on what you need them to do, send them the actual tasks. Those tasks then go out, typically they'll be going out in email overall, and then allowing for people to go into lightweight portals that require no login whatsoever, that are personalized and white labeled ultimately for people to get things done. And so the future of this is that clients no longer have to you have to go back on a phone call, no longer do you have to go back on email, but leveraging a system that does that for you automatically so that you can take your onboarding time down from 60 to 90 days to ultimately a matter of weeks. And again, technology is going to help drive that overall. And so that's an example of the client tasks. So that was section 1 of what's coming up in the future. Section 2 is around automation. And this is a bit scary for folks, but again, it's about how to leverage it and how to manage it, and ultimately be able to leverage it to free up capacity using value pricing and then driving towards more advisory services. And there's 3 different levels of this that we're going to talk about: automated processes, artificial intelligence, and predictive insights. That's the 3 main buckets overall. So we talked about this before. This is the 7 major service offerings I mentioned earlier in the talk. And what automation and where it's impacting, again, I mentioned before that number crunching takes a back seat. You can see the tax and the bookkeeping, and even some of the payroll currently is being impacted by automation. And coming up sooner in the coming years will also be accounting. And so again, that leads to where leveraging that value pricing on that, and then again the movement to advisory services overall. Again, this is in the PDF. You can see the definitions of what each one of those categories is. I'm not going to spend a bunch of time on it. But on the automation side, it comes into what I've labeled as 3 different waves going forward. And phase 1 is what we're currently in today. Some of this was launched at QuickBooks Connect and is coming out in the products very, very soon. And I would say in the 2017, 2018 years. First one here, I give an example, is auto configuration. What I mean by this is the ability for someone to essentially maybe sign up to QuickBooks Online, be able to identify what bank accounts they might use, might identify what type of business they are, and the product will auto configure itself, chart of accounts, ultimately be able to connect to those banks and be able to start putting the bank feeds into the product. That still requires, again, alteration of the chart of accounts based on what the accounting professional or the accountant that's servicing them. But again, they're working more and more to be able to deliver that. The next one is auto reconciliation. This is the ability to use machine learning to see how others out there currently are taking, let's say, a power bill and then allocating that across which account types. And then being able to auto reconcile, so being able to label, be able to lock it into the right codes overall. And it's more of not the completion of that, confirming, but ultimately selecting that for the small business. And again, it can be derived even from what you're doing across multiple clients to be able to create the same sort of pattern that you want that small business client to be able to do. The next one is what I call really around SPC control charts. That's a really technical term for industrial engineers. But what this is alerts. And it's using what's called control charts that you wouldn't necessarily see, but what's happening in the background. And basically, it's allowing the products to understand what is going in and out of, what should be, proper variance between, when things should be crossing thresholds. And if something goes completely out of whack, let's say a bank account goes too low, purchase is too large in size, and it doesn't fit the standard behavior of that particular firm, it alerts the accounting professional in the moment to be able to have a conversation about what's changing in that firm. And so it's providing insights based upon when things are in or out of spec. The next one is really transaction completion assist. This is the ability that when an invoice is created, being able to help be able to collect on that invoice on the backs of that. So when something has happened in the books, being able to take that to delivery at the end, and it's spawning and alerting that something needs to be addressed to be able to continue that from, again, maybe an invoice being raised to the actual receiving payment at the end. Benchmarking is another one, again, using the large data sets that exist to be able to let folks know how they compare to others. We've seen bits and pieces of that, for instance, in QuickBooks back in the desktop days, but actually be able to do this in real time with a lot more granularity. That's what the data ultimately provides underneath. And the last is around matchmaking. This was a really exciting thing that Intuit was talking about at QuickBooks Connect, which was when a small business comes in, most of them aren't, a lot of them aren't getting assigned to or suggested to be able to working with an accounting professional. In my days, we would see that there would be 200% improvement or in terms of their likelihood to succeed if they're working with an accounting professional. So it's making sure that those that aren't are getting allocated to and working closely with an accounting professional. So that's phase one. Phase two, transaction completion assist moves to auto completion. So this goes from, when you raise let's say you raise an invoice or you add a payment in, it will automatically run its course without interaction needing to be required. Again, following the pattern that's been allocated in there and only flagging when issues arise across that sort of workflow. The second one is auto identifying, finding errors that exist from clients' work within the books, and then promoting the ability on what should be done to solve that. So providing some ideas of what may be the right way to solve it based on what's been done in the past. Scenario assistance. This is being able to look at what is occurring in a particular type of client based on patterns that have existed elsewhere, and seeing when things might be out of control or out of the loop, being able to flag and be able to highlight where those issues occur and some ideas of where maybe to go down. And this is stuff we're talking about 3 to 5 years out. Loan facilitation. This really goes in terms of somebody's, they're having financial difficulty, being able to find, pick, secure, and ultimately move cash instantly to be able to provide a loan and debt assistance for what they need. And then it's the emergence of what it's being labeled as the financial web. This is the interconnectedness of the banks, financial institutions with the actual books themselves, so that you don't have to manually move data back and forth, and being able to have everything at your fingertips across all the different institutions for a small business client. And the last one is phase three, and this is much further out there. And this is where, again, this is more futuristic. This is way out there, but, activities that happen, it's really confirmation based. The system relatively knows what's happening and what needs to occur, and it's just confirming with you, the accounting professional, that that's indeed what needs to happen with that pattern. Predictive insights. This is creating dashboards, visualizations, analysis to have advisory conversations automatically created and tailored and twisted and changed based upon the nuances of the business at a given moment and over smaller periods of time. That leads to scenario stuff. And the last one is what I call workflow objects. This is the ability to have your workflow and have it auto perform across many different vendors. So you may have an AR workflow that's going to involve 3 different technologies that come off of QuickBooks Online, and that workflow process can automatically carry itself without any intervention across those. Again, phase 3 is much further out there. So the last topic that we're going to spend a short amount of time on is blockchain. Blockchain, for those of you that are familiar with things like Bitcoin and so forth, is the fact of having in cyberspace a digital ledger where transactions are made and they're done independently off of multiple servers where the transactions build off one another, and so there is a transparent history that is unerasable over time, and it's chronologically and made publicly. And so that's the definition of what a blockchain is. And why it is important and why this is something to take note of is over the very, very long time, which I'm talking in 20 years, it'll redefine how companies, governments, and businesses interoperate. Because it's interesting for them. And it's the movement of what we do in terms today of double entry accounting, moving it to what we call triple entry accounting. And that's because you're going to be having basically contracts existing between parties that are agreed upon. That spawns transactions that then occur that are interlinked, and it ultimately allows for the elimination of tax evasion and fraud. I've pulled these 2 visuals from DevCon 1. It's a very futuristic group. This was done by the Balance 3 guys. And what it shows here is this is a classic entry of double entry accounting. And all it is basically the understanding that you've got T accounts. Again, when you're doing something in one set of books, you're having to make 2 entries. And again, when you're doing commerce or you're doing business between 2 parties, each person has their own set of books with double entry, but no interconnectedness except for what's been stated on their books. And if somebody was to lie and cheat to say that, indeed they didn't collect this much money, and they were to change that, it doesn't get reflected in the other books, so it's actually disjointed. And what triple entry accounting is the interlinkage of that between using what's called smart contracts. And that is so that when a transaction occurs, both parties are getting links to those that are sitting on independent third-party servers and so forth that then have the history of what was sold, what was bought, who did what, and then ultimately pairing that to set accounting standards like XBRL and so forth. And so triple entry accounting is the merger of that across an independent platform that links not only it takes the double entry accounting of the two different parties, but interlinks them together so that you ultimately have one truth that can be adhered to. And so there is little movement on this today. This is very futuristic, but it will accelerate over time based on government's interest to fight fraud and so forth. You can actually see this has actually started in China. They are now doing invoices printed on government paper stock, and they're going to digitize what they're doing in 2018. And what this ultimately leads to that accounting will change to become intertwined and interconnected. And it will impact things like audit because, again, everything is understood, available, and again, from a computation side, easy to compute. And where governments might move to in the long term is that it's not about doing taxes, but it's about confirming what has been done in the past and ultimately know what your liability was. But again, very, very futuristic stuff. So that goes to our last polling question of the day. Of the three trends I talked about, or the three major shifts over the long term, collaboration, automation, blockchain, which of these most interests you, or is most interesting, both in the positive and the negative? Again, I try to give you a sense today of where we started, what's going on currently in the moment, and some really, really far end stuff as well. So again, I'm going to close this poll down in just a few seconds. 3, 2, 1. And automation takes the cake there. It's over 50%, with blockchain second at a third. So thank you so much. So this brings up our wrap up for today. We've talked about what the top 10 barriers were to firms, the 5 industry trends. Again, that was really around number crunching takes a back seat. We talked about technology, niche marketing, or the niche focus. We talked about age, and also lastly, then we talked about going global. 3 major shifts. We talked about collaboration in the short term, medium term. Talked about automation, how that plays out over time, and then that futuristic one with blockchain. If you want more education, tips, tricks, again, some of the stuff we talked about today in more depth, you can find articles written up there on firmofthefuture.com. Again, talking about certification and so forth. If you haven't get certified, it's time to do it. Again, this is the journey. You go to qbtrainingevents.com. If you're looking for more details, again, you can also go to Carbon at carbonhq.com/editions, or learn more about Carbon at carbonhq.com. Brought to you today by myself, Carbon, but also from Intuit QuickBooks. And what I want to do now is field a few questions overall.